Hello again. Welcome to another episode of the Uranium Market Minute. My name is Justin Hune, and I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Before we get into it, nothing in this video is intended to be investing advice. I am not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. With that said, let's jump right into the daily scoreboard here. The price of uranium today slipping slightly down to $42.75 a pound mid-market. This is after Friday's steep month-end sell-off of over $3 a pound. The $42.75, interestingly enough, also is roughly about a 50% retracement from the hard bounce that we saw last month from that $37 a pound level up to about $48 a pound. What's happening right now essentially is we had the month-end sell-off, which I explained in the previous Uranium Market Minute episode that I released on Friday, where traders often take advantage of a market that's lacking in demand, in this case, primarily from the Sprott Physical Uranium Trust, to push the price down to get as low as possible of a month-end closing price, because that affects their forward month pricing for their offtakes that they receive the uranium for the next month. So very, very frequently, we'll see the price being pushed down, or at least an attempt at it, at the end of every month. Now, today we're seeing a slight slip, but this, in my opinion, has more to do with just a lack of demand, with Sprott Physical Uranium Trust, also known as SPUT, still out of the market, still trading at a slight discount to NAV, although today they had a pretty decent day, so perhaps they're a little bit closer to NAV. This is multiple days in a row now at a discount to NAV. So in my opinion, this is the calm before the next storm, when institutional money starts to come back into the ETFs and back into that vehicle, which I do believe will happen potentially as soon as this week. So Friday, the Sprott Physical Uranium Trust did not take any new capital, no new shares issued, and also didn't buy any pounds of uranium. They started the day at a 3% discount to NAV and 14.9 million in cash. I don't really think they're going to draw this cash down. Maybe they'll purchase a little bit, but seeing that they didn't purchase anything on Friday, we'll see in the next couple of hours whether or not they purchase today, but it's unlikely, without issuing more new shares and raising a bit more cash, that they're going to draw this down very much. Turning to the sector ETFs, neither URA or URNM issued any new shares on Friday. The AUMs pulled back from Thursday's AUM, dropping by 36 million. But for the month of October, the AUM for URA grew by 398 million, almost $400 million for the month of October alone. And URNMs increased by 286.4 million. That's a month-to-date increase of the combined assets under management of the two ETFs, $685 million for October alone. Still very, very solid month for these two ETFs. The combined AUM currently sits at just about 2.2 billion. Now that's 2 billion more than it was 18 months ago during the lows of last year. Let's take a look at the charts today. Starting off, as we always do, with URA. It looks to me, in my opinion, like there could be a little bit more downside here. I honestly felt like the bottom in this intra-cycle downturn in the spot price is probably nearing its end. Maybe we have another couple of days, but I do believe that either this week or maybe next week at the latest, we'll see money come back into the Sprott vehicle and into these ETFs. So we saw actually a decent day here for URA, although not huge volume. So to me, that signals kind of the sellers have sort of just vanished, but the heavy-handed buyers are still not here yet. Indicators are showing we could see a little bit more downside. So I wouldn't be surprised to see maybe a retest of the low on Friday down to that $26 level. Maybe if things stay weak for a bit longer than I expect, we could see a return back down to this 50-day. If we get that lucky, that's a very, very strong buy signal, in my opinion, because this, in my opinion, is going to be a higher low. We had the lows back here late September, early October, of that pullback from the really incredible run of September. Another strong move up on big volume, declining volume on the way down. We're trying to find a bottom of this next higher low. And I think we're still searching for that bottom. We saw that we chopped around for a little more than 2 weeks during the previous higher low. And now it's only been a couple of days here for that higher low. So we could see some sideways action here continuing for URA. URNM, very likely a very similar chart here. So it seems like the funds are flowing pretty similarly into these two vehicles. Sprott Physical Uranium Trust up on the day, pretty substantially, although the volume still just isn't there. MACD looks like it's kind of swimming sideways here. I again think we are in for maybe a few more days of chop, but I do think the spot price fall of the past couple of weeks is likely to have found a bottom or is very, very close, within maybe 5% of a bottom, in my opinion. So we should see, I would love to see this 20-day come down, just barely kiss that 50-day, and then we reverse back up to the upside. Take a look at Cameco, one of the prominent large caps in the sector. Nice day for Cameco. Again, nothing to write home about in terms of volume. So that's, to me, just showing that the sellers are not there, but the buyers, the really heavy-handed buyers, are also not there. MACD showing we could see a bit more downside, maybe another 2-3 days, maybe a week. But I do think we're close to the bottom of this intra-cycle correction. And this is something I actually tweeted out very vaguely yesterday and had a lot of naysayers coming at me of, how can you say this? What's making you thinking that? I expect you to justify this statement that the intra-cycle low is in. I don't remember exactly what I said verbatim, but if you don't follow me on Twitter at Uranium Insider, I'm pretty active on there when my days are not too busy. But yeah, I do think that this pullback is quite healthy. And it was a pretty nasty day out there on Friday, following a relatively declining week leading up to Friday. But like I said, that spot price is really moving on two primary reasons: the end of the month push down, which happened last week, and the Sprott Physical Uranium Trust not being in the market. So you might ask yourself, okay, so is the only buyer in the market Sprott? No, it's not. But they have been the largest buyer, and especially the largest buyer in terms of end user, as in an entity that won't be trading that uranium or selling it back into the market. But when they are not in the market and we see the price decline, in my opinion, what we're seeing is entities that would benefit from the price being lower, at least in the shorter term, taking advantage of that spot demand not being in there, even on a day-to-day basis. So it's only a matter of time before institutional money comes back into the space and sees the arbitrage opportunity of spot trading at a slight discount to NAV. And I think that that's coming. Let's look at the mailbag here. Let's see. Justin, what is this EU taxonomy all about? That's a great question. Okay, so the EU taxonomy, or sometimes known as the EU green taxonomy, is a classification system. That establishes a list of environmentally sustainable economic activities. Nuclear has not been on this list, although obviously, in our opinion, it should have, for very obvious reasons. It's the cleanest form of energy. It's the safest form of energy. However, it's gotten a bad rap, especially since Fukushima. Although if you actually look at the data and look at the numbers, it is the safest form of energy ever conceived, which most people do not actually know. Now, Germany is kind of the biggest story. Germany and France are the big stories in Europe, right? France is a very prominent player in the nuclear space. They have around 75% of their electricity comes from nuclear. They have some of the cleanest energy in all of Europe. Germany, on the other hand, shut down about 2/3 of their reactors following Fukushima. Still has 5 or 6 reactors running, but they're set to shut down shortly, like within the next 12 months. After Germany shut down, or during the shutdown of the nuclear plants, Germany put $500 billion into something called the Energiewende, which has been a vast push towards renewables. 500 billion spent towards solar and wind. And while solar and wind do make up an increasing percentage of their electricity grid, they operate at very, very inefficient levels. And this particular year has been far less wind and far less sun, both during the same year. And Germany's had a major energy crisis. Since these renewable pushes have essentially failed, for at least for their stated purpose in Germany, they've had to increase their natural gas electricity. They've had to increase their coal electricity output. They've had to increase their biomass electricity output. There was a story a couple of years ago that they had to cut down one of their sole remaining old growth forests in order to mine coal to keep the lights on. It's really been a bad situation. Now they're in this situation where they're essentially beholden to Russia for natural gas imports to make up the difference. They still have these half dozen reactors that could be turned back online, and they actually have some reactors offline that have yet to be completely decommissioned that could potentially restart. This is not something that anybody has been betting on, ourselves included, and we still are not betting on this. However, interestingly enough, we're supposed to vote this month on whether or not nuclear and potentially even natural gas would be included in the EU's green taxonomy. Last week, it was reported that Angela Merkel, Germany's chancellor, who's on her way out, who has been unabashedly opposed to nuclear for her entire tenure there, now has made a deal with Emmanuel Macron, the president of France, to go ahead and support nuclear's inclusion in the EU taxonomy. So what this essentially means is that it will allow nuclear into this taxonomy, and nuclear will then permit favorable financing for new nuclear power plants. It gives some security for investors. It protects private investors from greenwashing. It helps companies become more climate friendly. It mitigates market fragmentation, helps shift investments where they're most needed. This is a really big deal, not only for the reasons I just stated, but for overall sentiment and embracing of nuclear finally as a more appropriate clean energy. Okay. I really don't like personally to throw around the word sustainable because it's almost become entirely meaningless. None of these energy sources are technically sustainable. So to say that nuclear is sustainable, wind or solar are sustainable, it just doesn't, it's a meaningless term. But to consider it green, quote unquote, green in terms of actual air pollution, carbon included, nuclear is the best option. It's the best option in terms of operational efficiency. Nuclear just works day in, day out, regardless of the weather situation. The fuel is incredibly concentrated. You can store decades of fuel for a power plant in a very small area. The waste is minimal and easily held at the facility or potentially storage facilities like Finland has built. You've heard me talk about this stuff ad nauseum, and our monthly newsletter is going to come out tomorrow morning before the market opens. So if you're a member, look for that to be published either later tonight or probably most likely tomorrow morning prior to the market. That'll be downloadable from the website. We go deep into this current energy crisis situation. And like you've heard me mention on a couple of market minutes and other interviews that I've done recently, is this is setting up currently for a uranium super cycle. And that's not a term I would ever throw around. It's nothing I've ever really claimed. The supply and demand fundamentals for the mid and long term have always looked solid, and that hasn't changed. Honestly, it's only changed. I mean, I'd hate to say for the better, but from an investment standpoint, for the better, with the financialization of the sector and the accumulation of physical pounds that won't be going to, the nuclear fuel market, essentially. But I do believe that what's happening now with the embracing of it, the inclusion, the potential inclusion, the likely inclusion into the EU taxonomy this month, along with the energy crises that we're seeing globally, the potential for a super cycle for uranium is here. And what does that mean? That means regardless of the potential price spike that we'll see in the spot price of uranium because of the financialization, it could happen more in the short to midterm. We should see a much, much longer, strongly sustained bull market for the commodity. So even if we go price spike and come back down, let's say in the next 24 months because of hedge fund buying, we're likely to go up, come back down, correct at a price that works for the industry. That's probably going to be somewhere around $75 a pound. And then it's going to be a long-term, multiple years of a rising price environment for uranium. I increasingly believe that is highly likely, and it's what we're on board for. If you're interested in receiving a sample newsletter, go ahead and send us an email, support@uraniuminsider.com. Yesterday, I updated the weekly watch list. We have new positions. We've had some change in positions. We've made about 15 changes in positions over the past 12 months. So we're not just a buy and hold service. We essentially put our money, what we feel is at best to work in this sector. Out of the 64 companies that are available, publicly traded, we own 9 of them. And we believe that we've done a really good job so far in picking those companies. So look out for, we have some cash coming into the portfolio for some options trades coming off. So we will be entering some new positions when that happens. And we do believe that we're going to see a strong seasonal move here. So hang on, folks. We've got maybe a couple of days, maybe a week of weakness or maybe chop. And then I think look for those volumes in the ETFs. Look for the volumes in the Sprott vehicle. When you see that, it's game on for the next leg, and that's coming soon. All right. Be well, everyone. See you tomorrow. Cheers.